Okay guys, hello and welcome to today's webinar. My name is Pavel Horák. I am the ATAS platform expert and I think we are live. Please let me know, let me know in the chat whether you can hear me and see me, obviously, because these are quite crucial things. Just write okay or plus or no sound or nothing like that. And let me introduce ATAS, the trading platform. I don't know how many of you know, how many of you are familiar with ATAS, with the trading platform. ATAS is the complete ecosystem, so to say. We offer traders and analysts basically all available tools. ATAS obviously starts with the candlesticks, with the usual pattern action analysis, then goes through the technical indicators. The most important thing is the volumetric analysis and footprints in particular. Then, obviously, profiles such as volume profile and market profile, and the other stuff related to volume, VWAP analysis, and so on and so on. And also the level 2 data analysis. I will explain what does level 2 data mean, but it's represented among the other tools with a heat map. So my plan today is to show you the crucial improvements at the heat map finished by our developers a few days ago, basically. And then I will describe the purpose, the advantages of using the heat map. I see that you are already in the chat. I can read your messages. Thank you very much for the confirmation. I'm glad that everything works. And I'm actually used to receiving the questions during the webinar, so please feel free to ask me anything, whatever you found interesting, what you don't understand, and so on and so on. And I will be answering during the webinar. Not at the end, because otherwise I forget everything. I'll be answering during the webinar. So let's get started. The most important thing, just a second, I will arrange my desktop. The most important thing is obviously how to start heat map, because previously, or maybe you are familiar with the previous situation, actually with the current situation, you had to open the chart and add an indicator called depth of market heat map to the chart. So it was a separate indicator. What's changed? There's a new icon at the main ATAS panel with the icon reminding of heat map and obviously with the text heat map. So all you need to do is just click the icon and select the instrument you are interested in, because it's a separate module now. It's not an add-on indicator, but it's a standalone separate module. So usually I can choose, for instance, S&P 500, and as you can see, there's the heat map. I will maximize the screen. This is how it looks like. Don't worry if you don't understand the meaning of the colors, of the bubbles, of the skyscrapers here at the bottom of the screen, and so on and so on, and the profile on the right side of the screen. That's okay. I was just going to show you and demonstrate how easy it is to start the heat map by clicking one icon, selecting the instrument you are interested in, and that's it. The first thing you probably recognize is the user interface or the smoothness of the heat map, because the developers focused on the work, how traders work with the heat map. They sit in front of it and so on and so on. And when I move the heat map, I have to tell you, it's really such a nice experience, because the frame rate of heat map is 600 frames per second, which means the picture is being generated. Yeah, exactly, Leo. The picture is being generated 600 times per second. 600 pictures each second when I move the chart like so. So the smoothness is the first thing you actually see when you use it. Then there are some changes at the window. You can see that there's the instrument pull down like so, and there's the view in the upper left corner and heat map. I will show you, these are the fast settings. When you need to change something, adjust something really quickly, you don't need to go to menu, to special settings, and so on and so on. You just click here, for instance, view, and you can turn on and turn off particular elements of the heat map. When I jump to the current moment at the chart, which looks like this, then I can obviously turn off heat map. Then it's disappeared. All I see is just the price development. Actually, this is a line chart with the bubbles, the meaning and the benefits of bubbles. I will describe later. So this is the heat map. I will bring heat map back again. Best prices, these are the line charts, of course, for bids and asks. Then we have the bubbles. I mentioned them already 3 times, but trust me, it's very useful. Volume, these are the skyscrapers, so to say, at the bottom of the screen, which shows us particular volumes at price slices. I like using the term slices. I will explain it later. Then there's depth indicator. That's the profile on the right side of the screen. And finally, there's the CVD, cumulative volume delta. So these are the elements, and I will go through all of them while describing the purpose and actually the benefits of the heat map. And actually, I forgot something. There's also 3D view, 3D mode. Then it looks like so. And this is basically good to start with, because I will be describing the blocks kind of as the walls, as barriers, as physical barriers at the particular levels. As you can see, we have a high wall here. You can see that it is higher than the wall on the left and on the right as well. And when I scroll down a little, you see that there was a high wall here as well. This one. I'm talking about this particular one. So this is a 3D visualization of the walls. And now I need to describe and explain basically the meaning of each element. I started a heat map before, so I will bring it here. It's the same, it's still S&P 500, but it's been running much longer, and there's the development. At this very moment, the heat map is in the beta version. It's working, it's already been published, it's already being presented to the audience, but it's still beta version. That means that we are going to add another features and another elements, such as indicators, such as the possibility of drawing at the heat map, and other stuff. So what you see is a stable, running, reliable version of the heat map. The visualization is basically has been baked. It's already done. And we are going to add a few additional features. We will be continually adding them to the existing version. There are 4 or 5 actually comments in the chat. Looks very much like a book map. Yes. The point is that using any additional tool besides the analysis and trading platform has both advantages and disadvantages. That's out of the question. Advantages, those tools are highly specified. They are focused on one thing and one thing only, usually, obviously, otherwise you won't use them. We were going to make the life of traders easier and allow them to use the highest standard of the heat map available at the moment with the current algorithms, with the current using the current computer performance, and so on and so on. I mentioned that currently you are not able to draw at the heat map, which means you can't draw a line, for example, at the candlestick chart with, let's say, previous week low, and then paying attention what's happening at that level at the heat map. So you can use, there's other way how you can actually use it, but not particularly drawing at the heat map. I will be using my external drawing tool. For instance, I can draw, let's say, this channel, and as soon as they break through the channel and let's say break through the previous swing high, then I can open position here and so on and so on. I mean, I need to use external drawing tools, but it's just a matter of, I would say, days rather than weeks or even months until you will be able to use the drawings. So that's the first thing. And when it's been done, you have everything under one roof. You will be able to combine everything, to combine a candlestick chart with the heat map, with the footprints, with profiles, and so on, and everything will be connected. No need to hustle with the connections, because obviously you are not able to use one connection, one rhythmic, one DX feed, one CQG data feed in 2 platforms simultaneously. So you actually need to arrange 2 data feeds to make it work, which is annoying, obviously. Then sharing the information, of course, drawing the levels, the zones, the areas, and so on and so on. It will be much easier when the heat map. It is actually easier, not will be. It is already easier when the heat map is the part of the ATAS trading platform. So this was our goal, bringing you the state-of-the-art tool implemented carefully and with a lot of patience and a lot of effort into existing trading platform. So that was the reason. And the similarities, well, it's a heat map. So if you want to come up with a new car, it will probably have four tires, 1 wheel, 1 exhaustion system, 1 roof, 4 windows, and so on and so on. It's difficult to come up with something else because I will be describing the principles and the mechanism of heat map, and I cannot imagine to visualize it in a different way compared to this or compared to other software, of course, among Bookmap and so on and so on. Is the heat map available with all ATAS connections, futures, crypto, CFD via MT45 or only for futures? Futures, crypto, stocks. CFD is not being supported in ATAS. You are not able to display, for example, I don't know, euro, Australian dollar in ATAS. It's not possible because this instrument doesn't exist in futures. ATAS is focused on centralized exchanges, which means CME, CBOT, NYMEX, COMEX, Binance, Bybit, Kraken, Frankfurt Exchange, and so on, Nasdaq stocks, and so on and so on, but not particular CFD brokers, not I forgot the name. Forex, not Forex brokers. You need to use centralized instruments. So if you trade currencies, then you can trade obviously 6E, which is Euro American dollar, or 6A, which is Australian dollar, American dollar, but there isn't any instrument Euro New Zealand dollar or Euro Australian dollar. That doesn't exist. You can trade CL, which is crude oil, but you can't trade US oil. US oil is the ticker in the CFD branch in the Forex world, but you need to obviously trade the original instrument listed at the exchange. You can't trade XAU USD. When you want to trade gold, you need to trade GC. That's it. So you can use HEATMAP with crypto, futures, stocks. 3D mode looks like a topographical map. That's right. That's right. Or like a city or whatever. I like it. I can imagine people will be using that because look at that. It's so clear. You see immediately the importance of the wall. You see this wall. I'm talking about this one, which is so huge, so high. Look at that. This is the wall below the price, and then all of a sudden there's just this wall. So the height of the blue wall is incomparable with the height of the yellowish, orange-ish wall, is it? So that's it. I need to turn the 3D mode off. Okay, I like it this way. I have to say I like it this way. I'm somehow used to this, to 2D. For me personally, it's easy to read. I'm used to the interpretation of the formula of the information and so on and so on. So for me, 2D is the preferred visualization mode, but you can use 3D if you like it. I have to admit it's useful and looks nice, looks cool. I remember when I started using HEATMAP for the very first time, it was approximately 2020 or so when I saw the HEATMAP for the first time. I thought to myself, what the heck is this supposed to be? Because that looks so crazy, you know, all the stuff there, all the information. I thought to myself, I will never understand it. And look at that, I'm able to held a webinar about HEATMAP today because it's so logical and so useful. I will describe you the system and you will like it. I'll go quickly through the questions. Is this feature included with the existing ATAS licenses or is that an add-on? No, it's included in the existing licenses. So once you have any subscription to ATAS platform, you will get HEATMAP as well. However, it's beta version only at this moment, and you need to get an invitation to use it because developers have to allow your email address using HEATMAP. However, it's April the 20th, and today is starting a new campaign, a spring campaign of ATAS, and we are offering HEATMAP to the subscribers for the new subscriptions. So yes, it's available for everyone. Yes, stocks. Yes, stocks. That's very interesting. By the way, I tried footprint analysis at the Tesla stock, and it's unbelievable. It's unbelievable compared to, for example, S&P 500 or Nasdaq or I don't know, Russell 2000, Dow Jones. It's unbelievable how precise it is. So even the stocks is another absolutely different world. Does the height of the wall depend on the volume of that level? It would be logical. Okay, so this is a good time to basically explain the purpose and the meaning of the heat map. I will scroll out. I need some free space, like so. And I don't know if you are familiar with footprints. I guess you are. So we have a footprint and we have numbers on the left side and on the right side. Or I will do it that way. It will be even easier. When I scroll down, okay, and I will stop here. This is great. This is very, very good. Fine. So I will make it so that it's easy for me. Yeah, okay. So there's the price line. There's this line, which is 7,152. That is the current price. Somewhere on the right, I scrolled to left, so the chart is not moving, and I'm able to describe you the idea behind heat map. Anything above the line is red. I'm talking about this profile. It's red. Anything below the line is green. What does it mean? What does it represent? Because we were told, or many traders think of prices above current price or below the price, that at the footprint, the right side, the asks represent buys, and the left side, the bids, represent sales. That isn't true, or actually there is just 50% truth. And I'm not kidding. Like somebody comes and tells you, I don't know, he says, I don't know, the candle has open, high, low, close, and the close actually does not mean closing price. That's nonsense. But what I'm saying, I'm insisting on, right side does not represent buys only, and left side does not represent sells only. Because what's happening on the right side is happening on the right side, and obviously what's happening on the left side is happening on the left side. Which means, yes, right side represent buys, but aggressive buys. Only aggressive buys, aggressive buying. And the left side represent sells, but only aggressive sells, aggressive selling. And this is very important, aggressive. Aggressive buying on the right side, I should have drawn it. It's okay. It's okay. Aggressive buying on the right side, aggressive selling on the left side. But there are also, the right side represents also passive selling. And the left side represents also passive buying. How is that possible? Now I go back to the situation here at the chart, and that's why the profile is green here, because it represents passive buying, waiting orders. So we shifted from left side represents selling. Now we are talking about passive buying limit orders, and that's correct. Because imagine, when you are here at this price, you sit in front of your chart and you want to jump into position. And you want to be immediately in the position because, for example, there's a downtrend happening and you want to join the trend. So what would you do? you will use market sell order, aggressive sell order. Market order equals aggressive sell on the left. And passive buy, these are limit orders. You know that you can place limit order as well, but then you need to wait until the price gets to that level. Otherwise, you won't get executed. If I place a sell limit order at this level, at 7,160, then I need to wait until the price gets to my level and I get filled. Otherwise, I'm not in position. I'm still waiting for my execution. I'm not in the position. Unlike market order, if I want to sell and I click sell here, then I'm immediately in the position. Immediately. But the price is not guaranteed. But it's more about bits and asks and footprints and so on and so on. Let's keep it. So there are market orders and there are limit orders. These waiting limit orders, these buyers, they buy from these sellers. And these sellers on the left side sell to the passive buyers. It's not happening diagonally or, I don't know, among market order participants. It's always happening between limit waiting orders and passive and aggressive market orders. And these are the barriers. These are the barriers. This is the information. This is the message. What you see at the chart, at the heat map, are limit waiting orders. Below the price, in green, you see waiting limit buy orders. For example, I will get rid of this. Oh, what's happening? Okay. I will get rid of this. It's disturbing. So, anything below the price are waiting limit orders. These are orders which were placed before and they wait at particular levels. For example, here at this level, you see that this rectangle is long, which means that this number 127 represents 127 waiting limit buy orders below the price, and they wait to be executed. And the rectangle is long because 127 is pretty huge number, isn't it? You see that the other numbers are 37, 35, 54, and so on. The higher the number, the longer the rectangle. I'm talking about these particular rectangles at particular levels. Now, there's also this. And this is the opposite side. Same thing, opposite side. Anything above the price are waiting limit sell orders. These are sell orders. Waiting. I will write it down because this is the most important thing in heat map. Waiting, which means limit sell orders, and below the price are waiting, which means limit buy orders. That's the difference. Above the price, that's logical, because there's the level 7,152 here at this level, and if I want to open a trade at 7,155, then I'm obviously trying to sell above the price, obviously not buy. If the price is 7,152, why would I buy for 7,155? That doesn't make any sense. but I need to sell for the higher price that the current market is. Or I want to buy, but I want to buy better than 7,152. I want to buy for 7,145 only. I'm not going to spend 7,146. My maximum price, the exact price that I'm going to spend on one contract S&P 500 is 7,145. So I place the order and I wait. And then there is this number, 127. What does it mean? Two things or the combination of those two things. And the latter is the truth. It can mean that there are 127 traders who placed one contract of S&P 500, that's why 127 at the level, and 127 market participants wait until the price get there. Or, the other extreme, one market participant who placed 127 waiting limit buy orders, and this one market participant waits to get filled. And as I mentioned, the truth is somewhere between that. Between 127 market participants placing one contract each and one market participant placing 127 contracts. So it's a mixture. There are small fish, there are middle fish, there are huge fish. We, as the retail traders, we are the smallest fish in the ocean. We are plankton. We are invisible. When I place one contract, I'm absolutely invisible because there are 32, there are 72, there are 127, there's even 184 at this level. You see, that's why this rectangle is the longest one. My one contract, it's nothing. I'm less than no important. I'm nothing. I'm plankton. But we are interested in the big players, in the big fish. Why? They are able to move the market and then they make decisions. When I buy somewhere, market doesn't care at all. You know, it has its direction because the big fish, sharks, whales, I mean the big guys at Wall Street, banks, funds, institutions, you heard that, smart money, they control the market, they change the trends, and so on and so on. So we are interested in the steps, and now I'm not talking about the clusters, footprints of the biggest traders, of the biggest, the most powerful, the most important market participants. There are questions. How does this work? Micro mini. Does ATAS do a sort of aggregation of the volume between minis and micros? No. I honestly don't understand what would it bring, actually, to aggregate it. What we offer is the cross trading. You can actually analyze the main instruments, such as S&P 500, and you can open the positions at the micro contracts at the MES from the same chart. So you don't need to open another chart just to open positions. You can trade from one chart. But honestly, I don't understand what would be the benefit of aggregating volumes. You can't aggregate it because it's micro. 10 micros is 1 mini. So the aggregation should be what I see at mini divided by 10 plus what I see at... No. That should be what I see at the micro divided by 10 plus what I see at mini. But it doesn't make any sense because, for instance, S&P 500 doesn't care what's happening at micro S&P 500 because it's just a derivative, actually, from the same instrument, which is S&P 500. So it's not like that. Are those lines loaded right from the start, or do they load from the moment your platform is opened? Very good question. At this moment, it's being loaded since the moment I started platform, but very soon there will be an improvement of the heat map, and you can load even longer history, not related to the moment you started the platform. So for example, I will open the chart at 15:25, 5 minutes prior to the opening of the US session, and I can load the entire day, the entire European session and the entire Asian session. It will be possible. What's the line below your heat map? Line below my heat map, this one. This is cumulative volume delta, and it's delta, volume delta. That is the difference between bits and asks, because the sum, I mean bits plus asks, is important. Bits plus asks, and the difference. And the difference is also important. A minus B. A minus B is delta. B plus A is volume. Okay. This is the delta. That's the difference between the right side of the footprint and the left side of the footprint. And it tells you which side was more active, which was more important globally. And when you see that the line is declining, that it obviously means that the difference between the right side and the left side is getting smaller, weaker. And all of a sudden, the color of the line of the area changes to red, which means the left side of the footprint started being more important. But this is more about the heat map, footprints, and so on and so on. It's not that easy topic, but it tells you, yeah, as said, which side was more active. But you need to bear in mind, what did I say before? Because when I was learning analysis and footprints and other stuff, I really don't understand until now. I don't understand why nobody told me that left side is aggressive buyers plus passive sellers, or equals basically, and the right side and the left side is aggressive sellers and passive buyers. So when you see the green color, it doesn't mean that there are more buyers. This is the biggest nonsense of a lot of academies and mentors and YouTubers and all that stuff. There isn't more buyers at the market. No, the right side of the footprint is higher than the left side. And it's not the same, because there are phenomenons such as absorptions, and this is very important thing. By the way, these are absorptions. These bubbles. I told you I will explain what the bubble is, because imagine there was a downtrend, and I told you that the biggest fish, the biggest fish, the biggest of the big. Okay, now better. They use exclusively limit orders because they have huge amounts of money and they need to purchase or sell huge amount of contracts. So they simply can't go to market and place an order, I'm buying 1,000 contracts of S&P 500. No, they would worsen the price and they will reveal their intentions. They need to get height. They are hiding. And when the price started moving downwards, I will move it again. When the price started moving downwards, they placed waiting limit orders at these levels, and they absorbed the movement. That's why actually it's red, because it happened on the left side of the footprint, at the bids side, which are aggressive sellers and passive buyers. Retail, for example, because retail mostly trades through market orders, they were jumping into the trend because they were persuaded that this is a sure downtrend. They want to join the downtrend. There was, for example, this low. I will clean it up because it's already horrible. There was this low, for example, and the breakout traders, when they saw that these lows got broken, they started opening sell positions here, you know. But the biggest whale, they placed waiting limit orders below this level because they knew that there will be the liquidity, that there will be enough orders to fill their positions. So this is so easy because it's happening all the time. Below previous swing lows, there's a lot of liquidity. Look at that. There's the bubble. This is the easy sign and a very actually clean information that there was the biggest fish. There was a whale which waited for the breakout. Obviously, the biggest fish, the whale, doesn't wait for any breakout. No at all. Whale is not interested in any breakout. Whale is in the position since this level. And whale is going down. Whale is diving to the sea floor. This is the movement of the whale. And the small fish, sharks, and shark is a middle fish. And the small fish joins the trend. And so is actually, or so is supposed to follow the retail traders, the plankton. But plankton is usually, pardon my friends, dump. Retail traders trade on premise that they draw this level, you know, I see this low, so when this low gets broken, I will go short because we are in a downtrend. Hey buddy, we've been in the downtrend since actually breaking this low, and you should have opened short position here at the pullback to the broken low, not here. Because it's so obvious that there may come a biggest whale and absorb your orders to get filled. And what happened? There was this red bubble, and you see it's changed the trend. Then there are green bubbles. Maybe this whale sold here because the sizes of the bubbles are quite similar, are they? And then there are these bubbles. You see that? Green. Why is it green at the top of the movement? Absorptions. That is crucial. Absorption is, in my opinion, one of the most important things in trading, because you want to see the activity of the big players, of the biggest market participants, not a small plankton. I'm not interested in retail traders. I'm not interested in them. I'm following trend is your friend. The most important saying in trading, most important motto. Trend is your friend until it bends at the end. This is the bending. This is the bending of the trend at the end, obviously. Why? Because there are bubbles. Bubbles equals whales. So when we see bubbles, we need to get careful. There was the bubble. Why nothing happened? Because it's exchange, it's trading. Nothing is 100% sure. There isn't any holy grail technique. You can use highly sophisticated tools, but you still need to be prepared that something else is gonna happen. There was big bubble because the big whale can collect long positions. Long because it's red. It happened on the left side of the footprint. It's big. It's passive limit by order. The fish collected something here. Then the fish, with the whale, collected something here, but more. You see, the bubble is bigger. And then something here. This bubble, the third bubble, is bigger than the first bubble, but smaller than the second bubble. So what was the average price? I think it was somewhere here, actually, wasn't it? If this is the size of 2, this is the size of 3, and this is the size of 5, I don't know what the average is. 10 divided by, and what am I calculating? I don't know. But the average is 3.33, of course, because the sum is 10 and we have 3 purchases. So it's not absolutely 100% clear always, but you have the signs and you need to, and now I'm starting to talk about the heat map per se. Heat map, I mentioned, heat map is slices in time. Because, imagine this one. Okay. There are these numbers, 127, 184, 72, 98, is it 98, 99? Okay, and so on and so on. And somebody, the inventors of the heat map, came up with a brilliant idea. You can obviously display the numbers of the waiting limit orders as numbers, and then you get a huge spreadsheet, something like a crazy Excel or Google Sheet spreadsheet with a huge number of numbers. Almost impossible to read because it's exhausting. You will get exhaust immediately because a lot of numbers. Who is able to read that and stay focused and so on and so on. So somebody came up with the idea that they will start displaying the numbers through gradient. And when I click here in the upper left corner at the heat map, you see these gradients. I can switch the visualization style of the heat map by choosing different modes, different gradients. This one is not bad, actually. This one is not bad. I switched from the bluish, yellowish to violet, greenish, yellowish. Now, the idea is, remember this, because it disappears in a while. Remember that there's the violet color on the left, then there's the green color in the middle, and then there's the yellow color on the right. So, ATAS creates a slice in the moment. It slices, it stops the time, it creates a snapshot, so to say. And instead of placing a number here, instead of writing 127 at this level, there was 127 and there still is. It puts all the numbers into a matrix, not a movie with, whoops, something's changed. The market is moving. Matrix. It's a column. It's a column with numbers, and the low numbers get violet color on the left. That was on the left, and the middle values get the green color. That was in the middle of the gradient, and the highest numbers get the yellow color, and that's it. That's the entire idea of heat map. But now, the genius part. ATAS creates a new slice in a fraction of a second. And it will do the same. But the numbers here on the right side, at the profile, these waiting limit orders, it changes all the time. You saw that before. You saw that when the price was there, it was changing, the lengths of the rectangles were changing, and so on and so on. So it's constantly changing. And then Atas creates another slide. The third slide, the third price, the third time slice. And does the same. It searches the column of the numbers. It searches for the highest number. That highest number get the yellow color. Then the lowest number get the violet color. And the numbers between get yellowish green color. And that's it. And the idea is that we are able to see the changes. We are able to see, because obviously at the bottom of the chart there's the time scale, of course. So we are able to see the changes. We are able to see how long was the waiting order at that level. It was here pretty long, wasn't it? Because the white line goes since the beginning of the chart, I guess. It's still there until, I don't know, until the present. Unlike this one. See that? Unlike this one, because this line ended here. These orders were executed. So there were waiting limit orders until this moment in time. When I go down at that moment, I see 150845 0633665. You see the precision of the heat map. It's millions of the second, even more, I guess, because of the precision. So I see the development. There were waiting limit orders here, and there are no waiting limit orders all of a sudden. What does it mean? The whale was here. You see the green bubble. Because, and now the even more deceptive part of the game. What you see at the chart are sharks, big sharks. They have no problem with showing off. They have no problem with saying and revealing, hey, I'm here, I'm placing here 127 waiting orders. Unlike whales. Whales are not that simple. Whales use iceberg orders. Iceberg. What is iceberg? Iceberg is an iceberg. It's a piece of ice in the sea. So iceberg has the upper part above the sea level. And now I don't remember the ratio. I guess it's 1:4 or something like that, or maybe 1:6. Doesn't matter. The bigger part of the ice is below the sea level. So there is the majority of the iceberg. That is the iceberg order. And whales use almost exclusively iceberg orders. Why? Because they trade even higher amounts of the contracts, and they need to hide the activity by hiding the number of the waiting limit orders. You can use the control key at your keyboard. When I press the control key, I see 159. You see that? Barely. It's a white text at the yellow background. I could switch the gradient, but let's keep to that. Maybe you can read it. It's still 158, 159, 155, 157, 145, 16. 130 waiting limit sell orders disappeared in a fraction of a second. 130. These are not retail traders. These are big fish. This is big fish, big shark. But the whales are even worse. Because when I move my mouse above the bubble, I see, You see that? Buy 713, sell 400. It's not buy like buying. It's a trade on the right side of the footprint. And I said, these are either aggressive market buy orders or patiently placed and waiting limit sell orders. So the bubble is blue because it represents the right side of the footprint, but it's in fact waiting limit sell order, where the buys, it is okay that it's green and that it's saying buy, because it's saying what the retail did, what the aggressive traders did. They bought here. Somebody bought here 713 contracts of S&P 500. But there was the whale. And the whale absorbed all these orders. There were indeed 713 contracts traded. And now the horrible fact, actually, the information is horrible when you imagine that. Up to 713 market participants bought here one contract each, or I don't know, 357 people purchased 2 contracts each here. Anyway, they bought, and all this went to that one whale. The bubble represents trades from one market participant. Imagine the horror, basically. Somebody was buying, was frantically jumping into the long positions. I want to join the uptrend. Oh my God, it's such a long candle. This is sure. We broke this high. We are flying to the moon. Oh, hold my beer. Because there were these waiting limit orders from sharks already. There was 234 waiting limit orders. Imagine you are a normal trader. You are a candlestick trader, or you are even footprint trader. You don't see that. You don't see the walls. You don't see the skyscrapers. You don't see the barrier. You don't see what's waiting there for you. Only with HEATMAP. HEATMAP is the only tool when you are able to see the deception, the battlefield. They wait there for you, for retail traders. As soon as you get there, they beat you, they eat you, they consume you, they consume your orders. They will absorb them. Absorb is a nice word for being beaten, being stopped, not allowing going any higher at all. Big fish initiated this movement. They do it because they want retail to think that this is a huge, and now we are going upwards. This is a clear uptrend. It is not. In most of the cases, this is not an uptrend. On the contrary, this is a deception. They want you to think that this is a strong uptrend. Many people jump into position just because they see long green candle, but it's a deception mostly. Long green candle is mostly a deception. And there are whales waiting. They have their hidden orders. How is that possible? They place, for example, 20 orders only, but they want to trade 700 contracts. Imagine the disproportion. They place 20 orders and they want to trade 700. They want to get from the market 713 contracts. How can they do it? They place 30 orders and they wait. They have the best computers in the world. They have the best data connections with literally no latency at all. Their servers sit not in the same city, but in the same server room, like the computers of the exchange. So the latency is not like, I don't know, me or you connecting to Frankfurt or Chicago or whatever. Their computers sit 5 meters away from the main computers of the exchange. And when they start seeing that there are 30 orders get filled, they will add. From 30, the position will get reduced to 20, 10, and they add 20, and they are back at 30. And then obviously retail is going to buy, oh, it's an uptrend, I want to join the uptrend. So there is not 30, there's 25, 20, 15, 10, and they add again to 30. All you see is 30 waiting limit orders. But it looks like that these 30 waiting limit orders are there all the time. Nothing is happening with those 30 limit orders because it's constantly added to position. Carefully, not to add 300 and reveal the intention. Carefully through Iceberg order. That's why there are bubbles as well as these colorful lines, because the colorful lines tells you the big shark activity. These are not small fish. There were 234 waiting limit orders at this level, 222. There were 222, 234, even 231. This is a huge amount of the orders. But check the whale. 2,100 buy orders were absorbed. That is the whole sentence given to you through the bubble. It's okay, buy 2,100. Yes, 2,100 contracts were bought here by retail traders. And there was one fish, one whale, who sold here 2,100 contracts. Imagine you sit here at the screen, you watch the heat map, and what you can do. I will tell you what your strategy can be. And you see that this is today's. You see that jump in cumulative volume delta? Jump upwards. But what happened? Price went down. After such a jump in a cumulative volume delta, went the price down. It did not follow the intention. Of course not. Because there were absorptions. What can you do? You see big whales here. You see that the sharks waited to price get to that level. They sold here as well. They sold here, of course, because price was below that level. And I told you anything above level are waiting limit sell orders. So the sharks were going to sell here. Sharks sell. But whales absorb. That is the difference between those two fishes. Whales absorb, sharks sell. And when you put it together, you see two kinds of fishes. You see huge absorptions. Then you can engage the simplest thing, market structure. That is the simplest way at the exchange. Check this out. Whoops. What did I do? I can actually draw a line here at this low. At this low, all of a sudden there's it's okay, never mind. It's an arrow. Oh, okay, I can do it like so. Yeah. Now I've got the level represented by this. I saw previously the activity of the whales. This was the whale. This was the whale. This was the whale. And then there were sharks as well. The brightest colors at the heat map are sharks. So I do the simplest possible thing. I will draw the line, the low of the swing. Where did all this happen? This is the obvious swing. This was the highest high of the swing. And this is the first low. And then it went back to the upward. Then it broke the level here, of course. and continued downwards. And you need to wait. You need to wait at this level to get filled, because the price very often get there. Look at that. I will get rid of our iceberg because we already know what the iceberg is. We don't need this. And check this out. We wait at that level. We wait at that level. Look at that. Look at that. Thank you, S&P 500. Thank you, sharks. Look at that, what happened. I told you that this is the development of the waiting limit sell orders. Sell because the price was below that level again. Below that level. It went to the level from the below. So anything above that were sells. And look at that. I pressed the control button. There were 23 waiting limit sell orders until there were 73. From 23 to 73 in a fraction of a second. 50 orders. Somebody added 50 waiting limit sell orders. Is it you? Is it me? No, I've never opened a position with 50 S&P 500 contracts. It must have been shark. And there are two levels. There's also below it 19, and then all of a sudden there are 67. From 20 to 67, it's 57 contracts added at the 7,142.50, and then there's this 50 contracts added at 7,142.75. 100 orders. Sharks added here, placed here, because they saw that the price is finally, well, not finally, this is not 10 hours of waiting, this is just a few minutes. Price was getting back to the level, to the previously broken this. I'm talking about this low. I'm talking about this low. See that? And I can draw it perfectly. Look at that. I will move it, and I'm turning off the chart. I don't know why. I'm talking about this low. I will draw it precisely. Look at that. How it perfectly works. So you actually open the trade. You see that the sharks started adding to position. So you place your waiting limit sell order here, and you place the stop loss either above a barrier or above the previous swing high. You are in the position, and what happened next? Whoops. What happened next? They revisited the area. They collected the positions here. Look at that. They did not go above this high. I told you that you should have placed your stop loss at 7,147. 7147, yeah? 7147. There was a pullback. Shit. Whoops. They eventually get through. But this is the way how you can actually trade it. And then there's the same situation. There were sharks. Then there were bubbles, whales. There's the bubble, and so on and so on. This is the low. So you draw the line here. At this low, this is the first low after the high, and you wait. You get filled here. You place your stop loss here. This was tough, wasn't it? This was tough. I need to draw it very carefully. Very, very carefully. I don't know. Maybe they took it off, maybe not. Maybe it was just saved by one tick. But anyway, this was your entry, and you could have opened short here. This is the way how you trade heat map. You get the, look at that, waiting order, shark. Shark decided to place sell order here. And this is the whale. This is the whale. And this continuous sweeping the liquidity makes me think that there must have come a huge movement downwards, because all this looks to me like collecting the positions, collecting the shorts to be able to make a massive move down. We can unzoom and we'll see what happens eventually. Another collecting of the position. You see how the sharks started being interested in collecting the shorts, and they hoped that the price get there. And we are here currently. So this is how you trade it. You can either use it for closing the position when you see huge waiting limit buy order and you start seeing red bubbles, then you close your short position, because that means that the whales might be closing the positions too. Or you simply open the long, because there are a lot of red bubbles which represent buying. Here is it. See that? Look at that. They created this swing low, and the sharks started building limit buy orders one tick below the previous swing low. And they got filled here, and now they are either in nude position because they closed their short positions, or they opened long position. Okay. That's the heat map, actually. That's the heat map. Now the questions. Okay. Micro mini. Okay, and now I was here. Okay. High level volume. What's the line below your heat map? I said that is a high limit order. Would it be relevant to see the cumulative orders, even those removed, never executed, or would it be completely useless? Yes, it's useful. It's useful because when you see that the sharks built walls and they started removing it as soon as the price started getting to those levels, then you need to think like a shark. Why did they cancel the orders? Because they are not interested in that trade anymore. Or they changed the mind. Maybe their algorithms and all the computers and so on told them, hey, opening the position here is not a good idea. Let's cancel it. So when you see that there's a trend, a huge trend, and the sharks remove their waiting orders, then it is a good idea to join the trend, obviously. Because the sharks got a new information that the market will probably go lower. So they are not interested in opening any longs, or they decide to stay in the short position longer. So you can trade it the other way as well. The big orders is your big fish. Big fish is what you see at the heat map. These rectangles, these lines, these are already big fish. Because check this out. For example, here, there were 180 waiting limit orders. Then they changed it to 90. Somebody reduced 90 orders. That's a huge amount. It's a huge shark. And all of a sudden, from 95, 93, 97 to 197, somebody added 100 contracts. It's a big fish indeed. However, it's nothing compared to whale. Check this out. Sell 7,100. One market participant, one absorbed 7,100 sell contracts. I forgot the name. So the whale absorbed 7,100 contracts. So imagine the size of the market participant. It's a huge fund. It's a bank. Somebody maybe backed their positions because they use S&P 500 for hedging the positions, So somebody hedged the position. Why? Because of the macroeconomic information. They know something. They may know something, Maybe they purchased, I don't know, Amazon, ABC, Google, Apple, Tesla, whatever, and the price goes against them. So they don't want to collect the losses. They just hedge their position at S&P. But it tells you the same thing. They are hedging. They know that they are in a wrong position. That doesn't mean that they get rid of their, I don't know, 10,000, 100,000 stocks of ABC, Google, Amazon, and so on and so on. No, they collected it. They've been collected it for hours, for days. But currently, the market goes against them, so they hedge it. They open the opposite position at S&P 500 to balance their current wrong position, to save them. And that's a signal for us. Somebody's changed at the market. It's worth trying, because HEATMAP is focused on ultra scalpers. It's not for somebody who opens a trade at 16 o'clock and closes the trade at 19:30. Now, it's for hyper scalpers. Hyper scalper. When you open the position and you close the position in 1 minute, or 15 seconds, or 2 minutes. These are the fastest trades. You open it, you close it, either in profit or in loss. You are not interested what happened in 5 minutes. You want to quick in, quick out. And HEATMAP, I hope you start feeling it. HEATMAP is the proper way how to get the advance against the others. Retail traders see breaking the lows, so they open shorts. Haha, come on. There was this whale, and this whale absorbed maybe 7,100 small retail traders who opened short position, one contract here. 7,100 unhappy eventually. See that? Oh, actually, look at that. What did I tell you? I told you that it's very probable that they were building the position, and all these actually sweeps and stop loss hunts, and there are so many terms how you can describe the situation. They were actually accumulating the short positions, because on and on and on and on. And look at that. All of a sudden there were the sharks. I told you, look at that. Look how many sharks started being interested in joining the downtrend. So, and that happened. Look at that. Look what happened. And then the sharks, they could have started selling here, closing their short positions or opening the opposite one. I don't know what happens next. I don't know. But I see the crucial area here. So as soon as the price get there, I will draw the swing low and wait for the breakout. And when the price gets broken through, I will wait for the pullback, open the short position, and trade to the downward. That's it. Yes, you want to take your trade with the big fish on my dome, obviously. I'm not going against the whale when I'm a plankton. I will join the whale. I will join the dive of the whale to the sea floor, not going against the whale. And sharks? Who is with me? Plankton. I'm not interested in plankton. I'm interested in whales and sharks. What are these dots placed on the price? Bubbles. These are the footsteps. Footprints, but not footprints like bits and ask. These are the steps. This is the evidence. This is the evidence of whales. Because look at that, 2,400. The whale absorbed here 2,400 buying orders. Now the whale absorbed 3,400. Now the whale absorbed 4,400. You see that it increases? The whale is happy. It's a happy whale because the retail is dumb and it's getting more and more opportunities to open more and more shorts to the whales. Look at that. 266, 2,600, 77. Maybe the whale goes up to this level, but we have a low here already. I could draw a low line here and wait for the breakdown. But they created new high. So it doesn't matter. It's not more valid anymore. This low is valid at this moment. And look at that. They touched almost the level with the sharks. See that? And again, a whale. It's unbelievable how it works. So this is the crucial level. This is the crucial level. Now this is the low. Maybe if they go higher, then I will draw the line here and wait for the breakout. This is my breakout. Yes, but I will wait for the pullback to that level and I will open the position here. I'm not opening pullback. I'm waiting for the flip. When the level gets flipped. Yeah, it's valid. Here. It's breaking through, doesn't it? Does it? But there are still the sharks. There are 670 orders waiting at this level. The fish is clever. The fish wants the shark to join the trend because the sharks will be happy. There will be more big fish in the trend. So I bet that the price get there. Well, not betting. I'm not bet. Look at that. Look at that. What happened? And now the price can go lower. This is not live trading, but this is the mechanism how you can trade based on the heat map. Now, quickly. In the settings, you can change the gradient here. If you don't like this setting, you can change it for something like that. Which is not bad, basically, because anything below the price is waiting limit buy orders, therefore green, and anything above is red. You can use this one as well. The highest levels are red. And then there's, for instance, this one. It's not bad at all. And there's something at the bottom. I think this one. It's not bad as well. It's quite good. It's quite good, actually. So you can choose this. There's the cutoff where you can cut off, obviously, the highest and the lowest numbers so that there are just the lowest and the highest numbers. Just to... Okay. Then there are another settings, clustering. It's about the bubbles I'm interested in. You see, I can reduce. Obviously, this says nothing. Actually, it does. It's saying that the whale started accumulating shorts because they absorbed as many buys as possible. So it's not useless. I personally like this. So one bubble, simple, that's it. Size. You can increase, decrease the size of the bubbles so that it fits your style. Volume or delta you can see, and pi or dominant. You can choose the pi and then you see the both sides of the story. That's it. And then you go, and this very interesting thing which I would like to share with you because, yeah, it's already activated. I need to deactivate it. It's called linking. It's called linking, and I can link the charts together. What is that good for? I told you that currently it's not possible to draw at the heat map chart, but you can link the charts, and all of a sudden you start seeing the reasons for sharks placing the orders there. Look at that. I will click here at this icon. I will select link with left window, and now it's linked. And I will move that, and look at that, how it moves as well. And what is it saying? Check this out. You see this huge waiting limit orders. It's not that huge, 94, it's actually nothing. But it's there because of this swing high. Price created this swing high, and it's obvious that a lot of retail traders placed stop losses here. So there's liquidity. And sharks want to use this. They want to use the stop losses of retail traders to get into their short positions. So you need to use it in a context, obviously. There's an order block. This is an order block. So maybe the price turned here. That's why there's this order with it's been deleted. See that? This is what I talked about, because the sharks saw that whales have been accumulating the positions, but the price is going higher and higher. Was I wrong? It's not a correct question. I told you that I'm drawing a line here and I'm waiting for the breakout of this line. It did not happen. So I wouldn't have been in a short position because no breakout. We are going higher and higher. And they pulled out the orders. There were orders and all of a sudden no orders. It's saying something as well. Maybe they are going to sweep this liquidity. I don't know. And it's not there already. It's too away. It doesn't make any sense to place waiting limit orders at 7,186. It's 50 points away, so it doesn't make any sense. And you can certainly use, for example, here on the left side, it's a 5-minute chart, and you see this is an uptrend, obviously an uptrend, you know, low, 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 and so on and so on. These are not being broken. However, high, broken, high, broken, high, broken, high, broken. It's an uptrend. So we are waiting. We prefer longs to shorts. And then it makes sense why we wait, for example, at this level. If there were waiting limit buy orders, then we should have joined the uptrend from this position, because we are in an uptrend. And if there were sharks and whales who actually opened long position here, then we could have joined the uptrend. So that's it. You should definitely combine heat map with other methods. Not like I'm seeing whales and I'm seeing sharks and that's my trading styles from now on. No. It's the microscope. It's the microscope. Heat map is a microscope, but you need to see the full picture to be able to use the microscope. So add it to your arsenal, start using it, but continue using your analysis. When I see that the price continues breaking highs and is not getting back to the lows, then obviously I prefer longs to the shorts, of course, up to the certain level, because there were two lows here and they actually moved downwards. But still, this was the lowest low. This was the previous low. This was the youngest low prior to this movement. So I'm paying attention to this low. If this low won't get broken, we are not in a downtrend. It's just a temporary pullback. Downtrend requires breaking of the level and then pull back to the broken level. And then I wait for the heat map. I want to see sharks and whales here. Sharks with the waiting limit orders and whales with the bubbles. It's that simple. It's not tricky at all. Okay. So That's it. I'm going to write to Leon that I'm done. I'm finished. I will finish the questions. Okay. So in most cases, we would look at ES while actually trading MES. Not in most cases, but always. Always. It doesn't make any sense looking at MES and not looking at ES. We need to see what's happening at the main instrument. Look at that. Something's changing. Something's changing. See the CVD? It's not going upwards anymore. It's hesitating. So we need to see the main instrument with the main volume, with the main importance, with the main power to move the markets. Do you have a guide? I think we have something at our YouTube channel, at Atas YouTube channel. So when you look for Atas Trading Platform, Atas Trading Platform is the easiest way to find our videos. And there are a lot of educational videos at Atas Trading Platform. It is in English. And we have local channels in German, Spanish, Italian, and that's it. So you can watch it even in French, if you are from France. It's more better than Bookmap, HEATMAP. Is Peugeot better than Citroën? I like saying one thing. Somebody comes and asks, what should I trade? What instrument? What time frame? It's the same question as asking, what music should I listen to? I don't know. I'm listening to, I will make it up. I'm listening to Linkin Park, let's say, and somebody is listening to, I don't know, Ariana Grande, for instance. I'm not listening to Ariana Grande. I'm listening to Linkin Park. And the fan of the Ariana Grande is not listening to Linkin Park. It's based on your psychology, on your trading style, on your strengths and weaknesses, and so on and so on. Somebody likes trading Nasdaq, which is a BITCH instrument, the fastest one, a lot of liquidity sweeps, and so on and so on. But somebody likes it. Somebody trades Dow Jones. Somebody trades Russell 2000. So 10 people, 10 preferences, I would say. And that's why actually it's the same with here. Is it better than HEATMAP? We hope so. We hope that you find it useful, at least as HEATMAP, because we will be adding the indicators. We will keep on improving this module, this version of HEATMAP, and we want to definitely be competitive, of course, with the advantages we have, because we have advantages. We have the cluster. We have the candlestick chart on the left. We can draw here. I can engage my market profile, for example. This is how market profile in Atas looks like. This is my template. This is how I use it. I see a lot of things here which are interested for me. You see this? This is the POC of Friday based on volume profile. And simultaneously, there is the VAH of the market profile. Look at that. What I can draw here immediately is this region. This region is interesting. Why? Because there's the VAH of the market profile on the left and POC of the volume profile on the right. You see that? And what did the price do? The price get to that level and got rejected. So if I'm a scalper, I don't care. I feel safe. I know that I am safe until here. Until here I am safe. The price can go very close to the previous swing low because it's still an uptrend. And because I'm a scalper, I don't mind. I see this level here. I see VAL. This is VAL of the volume profile. And look at the reaction. Maybe it looks like nothing at the chart, but as a scalper, it's free money for you. This is free money because you see all the stuff here. And you see the low volume nodes and you see the high volume nodes and VAH of the volume profile. There's a selling tail even at the top of the previous market profile. So there's a high probability that something like this can happen here. And I'm interested in these scalps, fast trades. So this is the advantage of having powerful state-of-the-art heat map within ATAS. Because you can use all the existing tools, which are state-of-the-art, it's out of the question, with a heat map. It's like I like saying this, it's like a movie with Nicolas Cage. I'm still talking about that movie and I haven't seen it for months. And Nicolas Cage was able to see the future in that movie. 2 minutes. He was able to see 2 minutes of the future. And heat map is something like that. You see what may happen in 2 minutes or 5 minutes. You see the levels. And you are paying attention to the reaction at that levels. Imagine here. Imagine drawing. This is no magic at all because this is the VAH of the market profile and this is the POC of the volume profile. These are absolutely clear levels. So I draw a rectangle here and look at that. Look at that. And when my plan is being supported by sharks, which place these rectangles at the heat map, plus the whales, the bubbles. If I start seeing the bubbles here, then I draw a line at the last swing low, and when it breaks, I'm joining the trend. And now you see screen presso, it's got nothing to do with ATAS, obviously. I will install it later. That's it. It's another tool. It's another microscope, for example, in your equipment, in your laboratory. You can start using entirely different way of analysis and getting more confirmation. What is the market very probably, not necessarily and 100% sure, but very probably going to do. That's the heat map. Okay, guys. Thank you very much. Oh, I'm getting the information from my colleague. And it's not bad. For those of you who stayed until here, we have a special promotion. This promo code offers a 10% discount of any subscription. When you, this will be very easy, guys. When you, it's already there. It's already there. When you copy paste the code, it's really easy. Phoenix TF and ATAS 10. You will get the discount, and we will draw 5 viewers who will get 99% discount of the ATAS subscription. So you will literally get ATAS for €1 per month. It's the price of coffee. Not anymore, I guess. And also you will get the access to the heat map as well. I said at the beginning that the developers need to allow you using the heat map. So if you copy paste the code, you will get ATAS for €1 for a month. And additionally, you will get the heat map. So hurry guys. All you need to do is just copy the code, copy the magic code, Phoenix, TF and ATAS, and that's it. Nothing else. Just place it in the chart. We will get in touch with you, and we will offer you the 99% discount and the heat map. You will be granted the access to the heat map. And that's it for today. I hope I covered everything. I'm thankful for being able to describe you our newest module as well as some trading techniques. And maybe see you next time. Yeah. You get the codes. These are the codes to avoid confusion. That's it. Thank you very much. Have a very nice day and be careful in trading. I wish you a lot of green trades, a lot of trades with green results.